Real estate investing can be a maze, but the top investors always find their way to the treasure. What if I told you their success isn't just about what they know, but what they do? Why some real estate investors seem to always hit the jackpot? It's not luck, it's strategy. Imagine if you could see through the eyes of the best real estate investors. What do they see? What do they do differently? Welcome back to Prosperity Pulse Point. Today, we're diving into the world of real estate investing, but this isn't your average set of investment tips. We're going to change your perspective on how you think about and approach real estate as a whole. I've cherry-picked insights from some of the most prestigious real estate gurus and distilled their business models and investment principles into actionable lessons you can apply right away. The next 10 minutes are going to transform your understanding of real estate forever. And make sure you stick around until the end, because I'll be sharing a tip that's guaranteed to help anyone turn a profit in real estate. Let's get started. Chapter 1. Sam Zell. Alright, let's start with one of the most influential figures in real estate, Sam Zell. If you're looking to learn from a true master, Zell's career offers a treasure trove of insights. He's been in the game since the 1960s and is now worth around $5.5 billion. His journey began in college, where he bought and leased properties to fellow students. This early start laid the foundation for his remarkable career. Zell's disciplined approach is something every investor can learn from. Even as a college student, he focused on building cash flow and mastering real estate transactions. His company, Equity Group Investments, launched in 1969, is a testament to his disciplined strategy. This company has thrived for over 50 years and remains a major player in real estate. One of Zell's most notable achievements is his role in pioneering the Real Estate Investment Trust, or REIT sector. He currently chairs 5 public companies, including Equity Residential, one of the largest real estate REITs in the US. His sale of Equity Office to Blackstone for $39 billion was one of the largest real estate deals in history, underscoring his strategic acumen. A key lesson from Zell is the importance of discipline. This isn't just about being meticulous with your finances, but also having a clear, long-term vision and sticking to it. I remember a colleague who applied Zell's principle of discipline in his investments. Instead of getting swept up in market hype, he carefully evaluated each deal's long-term potential. This disciplined approach allowed him to build a robust portfolio that weathered market fluctuations. Zell's career also emphasizes the importance of adaptability. Real estate markets are dynamic, and being able to pivot when necessary is crucial. For instance, during economic downturns, Zell didn't shy away from making bold moves. He recognized opportunities where others saw risks and capitalized on them, a strategy that significantly contributed to his success. In my own journey, I've taken inspiration from Zell's disciplined and adaptive strategies. For example, during a recent market downturn, while others were hesitant, I invested in a commercial property that seemed undervalued. This decision, grounded in careful analysis and a disciplined approach, paid off handsomely as the market recovered. So, how can you apply Zell's principles to your real estate strategy? Start by cultivating discipline in your investment decisions. Focus on long-term goals and don't get swayed by short-term market trends. Also, be adaptable. Recognize when it's time to make bold moves and when it's better to hold back. Chapter 2. Donald Bren. Alright, let's move on to another giant in the real estate world, Donald Bren. If you're serious about real estate investing, Bren's name is one you need to know. As the wealthiest real estate investor in the country, with a net worth of $15.3 billion, his history is full of valuable lessons. Donald Bren got his start early thanks to his father, who was also a real estate investor. As a young man, Bren worked as a carpenter on his father's buildings, learning the ropes of real estate from the ground up. This hands-on experience gave him a strong foundation in the industry. Today, Bren's real estate empire is massive. He owns 550 office buildings, 125 apartment complexes, and even holds a 97% stake in Manhattan's iconic MetLife building. In total, he owns over 115 million square feet of real estate, primarily in Southern California. He's ranked number 132 on the Forbes Billionaires list, and his portfolio includes not just office buildings and apartment complexes, but also hotels, golf courses, marinas, retail shopping centers, and a coastal resort. One of the most important lessons I've learned from Donald Bren is his unwavering focus on the future. Bren is known for not dwelling on the past, but always looking forward. He once mentioned that he spends very little time reminiscing about the good old days, preferring to focus on what lies ahead. This forward-thinking mentality is crucial in real estate, where market conditions can change rapidly. A friend of mine recently applied this very principle with remarkable success. A few years ago, he noticed a neighborhood that was historically underdeveloped, but showed signs of future growth due to new infrastructure projects. While many investors avoided the area because of its past, my friend saw its potential. He invested in several properties there, believing in the future development plans. Fast forward a few years, and those properties have significantly appreciated in value, proving the importance of forward thinking. Donald Bren's approach teaches us to not let past experiences cloud our judgment. Instead, we should focus on the future potential of our investments. This mindset has helped me navigate the ups and downs of the real estate market, allowing me to capitalize on opportunities that others might overlook. So, how can you apply this to your real estate strategy? Start by researching upcoming developments and trends. Don't be afraid to invest in areas with potential for growth, even if they have a rocky past. Remember, it's about where the market is heading, not where it has been. What about you? Have you ever taken a chance on a forward-looking investment? Or have you hesitated because of past market conditions? Share your thoughts in the comments below. Chapter 3. Warren Buffett. Now, let's turn our attention to another titan of the investment world, Warren Buffett, known as the Oracle of Omaha. Buffett is one of the greatest investors ever, with a net worth of $110.4 billion. While he's best known for stock market investments, his principles are incredibly valuable for real estate investors too. Buffett's investment journey started early. He bought his first stock at age 11 and was paying taxes by age 13. Today, as the chairman and CEO of Berkshire Hathaway, he oversees a vast conglomerate that includes companies like Dairy Queen, Duracell, and Geico. One of the most profound lessons from Buffett is his mantra: be bold when others are fearful, and be fearful when others are bold. This advice is all about contrarian investing, a strategy where you make moves that go against the prevailing market sentiment. Let's break this down with a real estate example. Imagine the market is booming and everyone is rushing to buy properties. Prices are skyrocketing and it seems like you can't go wrong. This is when Buffett's advice would tell you to be cautious. Instead of diving in head first, take a step back. Evaluate the fundamentals and avoid getting caught up in the frenzy. On the flip side, consider a time of economic downturn. The market is filled with uncertainty and investors are pulling back. This is when you should start looking for opportunities. During the 2008 financial crisis, for instance, savvy investors who were bold enough to buy properties at depressed prices saw significant gains in the following years. In my own experience, I've applied this principle by making strategic buys during market lulls. For example, during a recent market dip, I invested in a distressed commercial property that others were too afraid to touch. The property needed significant renovations, but I saw its potential. After revamping the space and securing reliable tenants, the property's value soared, providing a substantial return on investment. Buffett's approach teaches us to look beyond the current market sentiment and focus on the long-term potential. It's about having the confidence to act on your convictions, even when it feels risky. So, how can you apply this to your real estate strategy? Start by doing your homework. Understand the market fundamentals, keep an eye on trends, and don't be afraid to go against the grain when the opportunity arises. Being a contrarian investor isn't about taking reckless risks. It's about making informed decisions that others might overlook. What about you? Have you ever made a bold investment when others were hesitant? Or maybe you missed an opportunity because of fear. Remember, the best opportunities often come when we dare to be different. Chapter 4. Bonus tip. In the start of the video, I promised to share a real estate investment tip that's guaranteed to turn a profit. Here it is. Consider investing in real estate exchange-traded funds or ETFs. Real estate ETFs are a fantastic way to invest in real estate without the high costs and risks associated with direct property ownership. They allow you to diversify your investment across a bundle of real estate stocks, bonds, and securities, spreading the risk and enhancing potential returns. Plus, ETFs offer the transparency that traditional real estate investments often lack. By investing in a real estate ETF, you gain exposure to a wide range of properties and markets, all while enjoying the liquidity and ease of trading that comes with stock market investments. It's a smart, cost-effective way to build your real estate portfolio. And that wraps up our exploration of the best strategies from top real estate investors. I hope you found these insights valuable and that they'll help you on your investment journey. If you enjoyed this video and want to keep up with more tips and strategies for real estate success, don't forget to like this video and subscribe to Prosperity Pulse Point. Your support helps me bring you more content that can boost your financial knowledge and investment skills. Also, hit the notification bell so you never miss an update. Thanks for watching, and I'll see you in the next video.